Good morning, this is Mayor Valensky with Driving Markets, driving while talking about markets. Let's kick off. So the markets came off slightly yesterday, especially the Nasdaq. Apple was downgraded, and as a result of that, that sent the tech sector south. The tech sector, which is the Nasdaq 100, made up 55% of the Nasdaq. Growth is made up of the top 7 mega companies. They will fall in the first quarter of 2024, and the markets are well overbought at these levels, and the tech sector needs to pull back significantly. So we're talking about a 10 to 15% drop in the Nasdaq and probably a 10% drop in the Dow, and they might resettle there and then from there consolidate before moving up around about the May-June time, in time of the elections. Everything that's coming out from the Biden administration and the Fed regarding employment numbers are completely fake. 52 to 56% of the jobs created in 2023 were healthcare and welfare jobs, nursing, assistants. None of them are going to contribute to GDP. None of them are going to contribute to productivity. They're just going to take money in. And that's one of the reasons why there's so much spending in the US, and the Fed is issuing trillions of dollars in bonds and debt in order to finance the super crony Biden administration of healthcare and welfare. And that's not going to create any productivity or economic growth for the US. That is a major problem because the numbers are fake. So if the numbers are fake, like 5.2% GDP or official 4.9% GDP, then you're going to have eventually the truth coming out. The oil is going to float to the surface of the water, and you're going to see that it's all been one complete fooling exercise of the US and global public. So what's really happening behind the scenes is that there is a real on the street recession in the US as well as in Europe, UK, Canada, Australia. It's not being officially reported because the central banks and the US Treasury, for example, in the States, don't really want to officially report a recession because that would cause a downtrodden atmosphere as far as the members of the public are concerned. So what you're going to have is you're going to have a situation where the Biden administration is going to continue fooling and faking the numbers to get through to the election. Hopefully they're thinking in their minds, let's get through this, let's get re-elected. I hope that's not going to be the case because we need Trump back. Yes, I'm a big Trump supporter, and we need to get essentially the Western economies, which is UK, Europe, of course, and the US, back onto production. If you get them back onto production, then you've got a chance of saving the economy. If that doesn't happen, what is likely to happen is that yields on US treasuries will rise due to the high risk that Uncle Sam doesn't have the wherewithal, the money to pay the coupon and the interest on those bonds. Therefore, the bond price is going to fall because the only people left buying bonds are the banks, and the banks are demanding a higher yield as a risk reward. China and Saudi Arabia, who were the big buyers of US treasuries, have now disappeared. They're not buying US treasuries. So you've got a lot of factors that will cause the US to officially go down. In addition to that, obviously you've got Middle East tensions, and you've got the Houthis, which are going to continuously shoot at shipping in the Red Sea. Like Maersk has now cancelled all shipping in the Red Sea till further notice. That is going to have an impact on inflation. So you're going to have rising inflation, rising yields, falling bonds, and a falling stock market. This is Mayor Valensky with Driving Markets. Have a great day. Subscribe, share. Catch you later.